So 2020 was a crazy year. We cannot deny that. But despite the adversity, despite a global pandemic, I was so inspired by meeting so many new business owners that started up in 2020 and said, I'm starting my business and I am going to do this and successfully have done so. So I wanted to make this a video for any new business owners that started up in 2020 and had incurred all these costs before they actually opened up their business. So first, let me introduce myself. My name is Jeanette Andrada, and I am the owner of Jeanette Andrada and Associates, where we help business owners maximize their profitability using tax and accounting strategies. So today, again, I wanted to talk about startup costs. So the thing about startup costs, and by startup costs, I mean any costs that you incur before you actually open up your business, those are not deductible like normal business expenses are. So when you start your business, you might have these expenses that you incur, such as, you might have startup or organizational expenses that you incur, such as hiring a consultant to help you analyze the market to see if it's a feasible market to get into. You might have to consult with an attorney to do a financial analysis and see, hey, like how profitable could I be with this business? Is this a feasible business? You might have to meet with a lawyer in order to tell you these are the contracts you have to have in place. You might even have to hire somebody and start training them before your doors even open for customers, because you want to have a trained staff before you actually start seeing customers. So all of these are considered startup and organizational costs, and they, as I mentioned, they are not treated the same as regular business costs on your tax returns. So when you think about your business start date, that's going to be when you actually start seeing customers. Anything before that, we are going to treat it a little bit differently on your tax returns. So for startup costs, we are allowed to deduct up to $5,000 off of our tax returns, and anything after that needs to be capitalized. So let me go ahead and break that down and give you a little bit more detail about what that means. So when you start your business, as you incur all these costs from the moment that let's say you started your business in June of 2020, and you didn't actually open up your doors. You didn't start actually servicing your clients. You weren't promoting it or anything. Like, you were still getting everything ready until October of 2020. Well, anything within there, you would take $5,000 off your tax returns, and then anything over that amount is going to be carried over for 180 months. So what that means is that if, let's say, you have $10,000 worth of startup costs, so the $5,000 you could deduct from your tax returns, and the additional $5,000, now you're going to be taking a portion of those off for 180 months. And so that's the way that it works in as far as your tax returns. So a lot of the times when I talk to new business owners, they're asking me, what do I do with this? Could I count this um, as part of my business expenses? I was paying for this before I even started, opening my doors, or before I started getting any clients, before I started even advertising to get new clients. So that would be the response. You still want to track all these startup costs because you want to be able to deduct them, because otherwise they're not deductible as a business expense, since you didn't technically, you hadn't started up your business, or you hadn't actually started operating your business because you didn't have clients, you weren't ready to have clients. This also applies for rental properties. So if you purchase a home and you start incurring all these costs to like do repairs and kind of fix up the home just to make sure that it's livable, before you actually start recognizing, before you actually start I guess putting it on the market so you could rent it out, that's you're not ready. You can't rent it out until you have all these repairs done and all of that. So that counts as startup costs, and you could take up to $5,000. The rest is going to be amortized for 180 months. All right, so I hope you found that helpful. If you have any questions, please reach out to me. I will leave my calendar link down below where we could meet like this on a Zoom call, go over any of your questions, and it's a free consultation when we go over any of your questions and come up with a plan to see how I can help you. And yeah, so feel free to schedule a time that works for you. I will talk to you next time.